The most common question which I ever get asked is, how do I know that a macro is likely going to expand and that we're likely going to see a clean low resistance liquidity run taking place? During this video, I'm going to be explaining to you everything which you need to know in order to be able to determine that a macro is likely going to deliver in a clean manner. So let us dive into the lecture. How to know the macro will expand. Timing expansions. What's important to note is that when it comes to macros, a lot of people interpret macros as if they are these magic time windows in which we see volatility injections taking place all throughout the day. And yes, the macros are important. However, you need to be able to filter out what macro is likely going to expand and what macro is likely going to chop around and consolidate. Therefore, I decided to create this video because this is by far one of the most important things to be able to learn when it comes to being able to time expansions. So when it comes to knowing that a macro is likely going to expand, we first need to define macros in the first place. When it comes to macros, I look at macros from the perspective of XX45 to XX15, meaning of every single hour of the day. Yes, we can be using these macro windows from the 45 minutes of the current hour till the 15th minute of the next hour. You are able to see volatility injections taking place within the markets. If you, however, treat this as if it's a pattern in the sense of every single macro, you should be out here trading, you're treating it completely wrong. And that is something which I really want you to get in your head, and that's why I'm pointing it out to you right now. What I see a lot online taking place nowadays is that people see the macro window taking place, the macro window is there, and the first thing they do is they buy the first breaker which presents itself. Or they buy the first value gap that presents itself. And then they wonder why the trade doesn't pan out. Look, what I want you to understand is that these breakers and value gaps and all these PD arrays, they form all the time. However, you need to be able to define which ones are likely going to pan out and which ones are likely going to fail. That is a whole different process which I created a previous video on, which I really suggest you to check out. You can find it on my YouTube channel. However, when it comes to how to know what macro is going to expand, there's a key element which I want you to take away. And that is that not every single macro is going to be that macro. Your focus has to be on becoming very good at recognizing what macro is going to expand. Because once you know how to filter out what macro is likely going to deliver in the low resistance liquidity run, what will happen is that you're going to be able to go out here and recognize, hey, this macro should deliver. But more importantly, you will be able to determine, now I shouldn't be looking at the charts. Nothing is going to happen. There's nothing of interest. And once you come to that stage, you will feel a sense of peace. And the reason why you feel a sense of peace is because you will realize, hey, you do not need to be trading every day. You do not need to be trading every single waking hour of the day. All you need is a few good setups a week and you can be set for life. Look, day trading is not every single day trading. Day trading is not going out in a day and trading 10 times a day. I'm not saying it's not possible, because it definitely is. However, I want to ask you the question. Are you living to trade? Meaning, is your whole purpose of life to go out here and trade the markets? Some of you might say, yes, I'm fascinated by the markets. I'm addicted to them, so to say. And you might be thinking to yourself, oh, there's nothing more beautiful than price action. Yes, and I understand that. I wholeheartedly get that. But what eventually leads to the majority of the profits that you're going to make throughout your career is realizing that you're trading to live. Meaning your trading must be used as a way to fund your lifestyle. It is not like you're waking up every single morning and you're simply going to go out here and push buttons for the sake of pushing buttons. No. You're using trading as the vehicle to fund a particular lifestyle which you want to live. And for some of you, that might be a crazy lifestyle. You might be one of those people that want to go out there and splash in life. Or it might just be to cover your bills, your day-to-day expenses. And you might just want a secondary income. It's very important that you define for yourself what's the reason that you're even learning how to trade in the first place. But I'm sorry if I went on a bit of a rant, but important topic. When it comes to defining macros, XX45 to XX15. Begin your macros 5 minutes prior and end them 5 minutes later than the official macros, so to say, as created by the inner circle trader Michael J. Huddleston. Full credit goes to him for creating these macros. Once you begin to add 5 minutes to the beginning and the ending times of the macros as ICT has created them, watch the magic happen. And you're going to be looking at the charts and you're going to be thinking to yourself, why oh why are the same algorithmic signatures repeating themselves from the 45th minute of the current hour to the 15th minute of the next hour? And once you start to see the reverse sequence in play, you're going to be smiling. And you're going to be thinking to yourself, what the hell is going on right here? And once you see this taking place, you will never be able to unsee it. And that right there is what I want you to work towards. So again, XX45 to XX15 is the whole foundation of that what I'm going to be discussing with you today. Anticipating price swings. When it comes to anticipating price swings, there are two ways that we can anticipate price swings. We're either trading continuations, where we can see that the market is expanding towards the upside, retracing lower, and we can then anticipate another expansion higher. This is continuation of bullish order flow. Or we can see the market expand towards the downside, retrace higher, and then expand lower once again. That right there is bearish institutional order flow. This right here is trading in sync with the higher time frame order flow. The second way of anticipating price swings, which is way more advanced, is trading reversals. What trading reversals implies is the following. When the market is expanding towards the upside and it's retracing lower and it has one more push towards the upside, we can be looking at trading the reversal, where the market expands towards the downside quickly. In a bullish example, what this looks like is the market has been expanding towards the downside. We see it retrace higher, it expands lower one more time, and we see that final manipulation leg taking place before a huge reversal occurs and we see the market expand towards the upside. What I would like you to focus on, if you're completely new to this style of trading where I'm teaching you exactly based upon time and price what's likely going to happen next within the delivery of price, focus on continuations. And the reason why I say so is because continuations are usually easier for the majority of people to see. Why? Because you're trading in sync with that higher time from institutional order flow. And as long as you're able to define that either the buy program or the sell program is yet to be completed, you anticipate that, for example, this retracement lower which is taking place is doing one thing, and that's engineering buy side liquidity above this high right here. Or within a bearish environment, where you see that this retracement higher is doing one thing, and that's engineering sell side liquidity below the low which set up that retracement higher. Why or why is this occurring? Well, in order for price to reach a higher time frame objective, a lot of liquidity has to first be engineered in advance of that objective. Why? Because the market doesn't just dump. Even on days where you see only back candles, what's happening there on seconds time frames is exactly what I'm outlining to you right here in front of you. It's important to understand that everything is fractal. And once you begin to see that these expansions, retracements, expansions are occurring across all different time frames, I would like you to understand that when you apply this logic from moving from a higher time frame down to a lower time frame, you're able to very clearly see what the higher time frame institutional order flow is. And when you trade in sync with that, that is where you can anticipate low resistance liquidity runs to take place. When it comes to reversals then, because I know some of you are like, okay, continuations are fun, but I want to be a jack of all trades. When it comes to reversals take place once the higher time frame program, whether it be buy or sell program, has been completed. And the way you recognize this is by becoming good at recognizing what terminus is for that higher time frame program. So when you recognize that this final push higher is taking place, and we take out buy side liquidity resting above this high, and we reach that higher time frame key level where we're anticipating the buy program to end, and where we're anticipating a swing high to form, when we recognize that and we see the signs of that taking place, we can then anticipate that the sell side of the curve is likely going to take place. Why? Because who has been making money all throughout this run higher? Buyers. So who is if they're likely going to spoon towards sell side liquidity? When we pay attention to the buy program then, we can see that the market initially expands towards the downside heavily, and we eventually see the market reach the draw liquidity for the sell program. When it reaches the draw liquidity for the sell program and we see the signs of a reversal taking place, we can then anticipate that if there is likely going to spool towards what? Towards all of these sellers, their stops. And what are their stops? They're above old highs. And this is engineered buy-side liquidity. Now, you might be wondering and you might be thinking to yourself, okay, why is this occurring? Why are you looking at the schematics with us and paying attention to anticipating price swings? What does this have to do with macros? And I understand that question, but let me explain. The way you're able to determine what macro is likely going to deliver is by recognizing one or two things. When the continuation is going to take place, or when the reverse is going to take place. And I know some of you are probably looking at my drawings right now with the free hand and you're thinking to yourself, man, oh man, this guy's a bad drawer. Doesn't matter. I'm explaining theory with you right now. And I hope that you appreciate the raw style. What I would like you to understand is that once you recognize that either continuation or reversal is taking place, and you're able to very clearly see, for example, within a buy program, hey, we're forming a swing low now after we engineered buy-side liquidity above this high, what we can anticipate is that the next macro, if price is not forming this low throughout the macro, that macro will do one thing, and that is spool towards the upside. Same applies for bearish, of course. If we pay attention to reversals then, and we see the signs of that swing high formation taking place up here, inside of a higher time frame objective, and I'm sorry, my OCD can't handle that these lines aren't perfect, but that's something I'm trying to work on. Accept more and more of the fact that when I do these raw lectures, that sometimes I'm going to make errors, sometimes I'm going to, draw something out not in the cleanest way, and I need to do it again. But I think that is also something which makes these lectures more valuable, because there's more of a human touch in that sense. When I create these PowerPoint slides presentations and I'm walking you through exactly all of these schematics, it feels too structured in a way. It feels too, I can't really express the way that I can express myself when I'm out here in front of you, completely raw, barely any preparation for the lecture. Simply have drawn some schematics in a way that I've structured, okay, this is what I want to discuss. Because if I don't structure it this way, guys, what happens? Like, my mind goes all over the place. And I have 1,000 thoughts within a minute. And then I'm simply going from topic to topic to topic. And I know that some of you would probably really appreciate those type of lectures. But maybe I'll create those very long lectures in the future. But for now, trying my best to stay focused on the topic, which is how to know that the macro is going to expand. Once you recognize that swing high formation taking place, and if it's taking place during a macro window, and you see the signs of the reversal sequence in play, where you recognize, hey, we're now changing from buy to sell program, you can anticipate that macro is going to expand towards the downside. If this swing high formation is taking place outside of a macro window, you can anticipate that price is likely going to distort time, which is basically price is not going to do anything significant, but time is going to print sideways. That is what time distortion is. When that macro eventually takes place, that is when you can anticipate the expansion towards the downside to occur. The same applies for the buy program, of course, but simply the logic inversed. Now, when it comes to these schematics, you can see this coming from a higher time frame chart. So if we're looking at intraday trading, the minimum time frame where you need to see either continuation of order flow or a reversal of order flow is on the 15-minute time frame. But I would even suggest forcing yourself to see it on the hourly time frame. And the reason why I say so is because on the hourly time frame, you can clearly see what each session is doing. Based on what the first session does, which is the Asia session each day, you can anticipate what the London is going to do. Once you're able to anticipate what the London is going to do and it delivers, you can anticipate what New York AM is going to do. Once you have seen the New York AM deliver, you can anticipate what New York PM is going to do. So what you can see is that there is a very specific time sequence when it comes to price delivery each day. And based on how each session delivers, you can anticipate what the next section is going to do. Now, when we pay attention to some examples then within the charts, because I know that the majority of you are probably looking at this lecture now and you're like, okay, all fun and games, these schematics, but show it on the charts. I'm going to be showing you two opportunities which were present on Friday last week. And there were many more opportunities. But the reason why I'm going to be looking at these opportunities with you is because Friday was technically a textbook day where there were opportunities after opportunities after opportunities. However, I need to make sure that when I create a lecture like this, that I'm able to share with you to the tick, this is how you should engrave it in your mind. This is how you should engrave it in your subconscious. Because envision it this way. You need to be able to literally outline what your training approach is within a matter of seconds. If you would walk up to me and would ask me, what's your training approach? I could share it within a few seconds. And of course, only what I'm willing to share, because there's a lot of things which I'm keeping to myself and my family. But what I'm willing to share, I can share like that. Just boom. Why? Because I have made this my own. This is my approach. And it doesn't change. Every single week I'm doing the exact same thing on the markets. And it's getting to a point now where even when I'm sharing my executions and I'm sharing my analysis, etc., people are like, but hey, you're doing the same thing all the time. And yes, that's what trading is supposed to be. Whenever you see someone online trading 10,000 different strategies all the time, it's like, what are you doing, right? And that's what I mean. That's the issue with retail trading, where there are so many different trading approaches that people get lost in all of the different methods of going about finding a trade. My advice to you is find what works for you and stick to it. And I have this saying, and that saying is KISS. Keep it stupid simple. My trading knowledge is very advanced, but my day-to-day process is so simple it can literally fit on a business card. And until you get to that stage, you haven't found your model yet. Because a big and common issue, which I see within a lot of traders that I see coming up, is what they struggle with is analysis paralysis, where they have all these different technical approaches, all this different information, but they're unable to fit it together. That's why what I'm doing within this lecture series, which I'm creating, and I hope that you're appreciating the structure as well, and I know that some of you are paying proper attention and you're seeing the results already. I hope that you're beginning to see that everything which I'm explaining is being outlined in a certain sequence of events. It's in that sequence of events that you're able to recognize what IPTA is doing on a day-by-day basis. So when it comes to an example of continuation, we're going to be paying attention to the afternoon session. If you go to the video which I uploaded prior to this video on my YouTube channel, you will see how I traded the afternoon session on Friday the 20th of June. This was a beautiful sell and was a perfect example of my Thunder model. The reason why I called this model the Thunder model is because my name is of course Zeussy, named after the Greek god Zeus. And Zeus, of course, struck thunder or strikes thunder. Thunder is my personal trading approach. And this is the highest probability trading model. And it's a continuation model. And this model is based around recognizing what the previous session did. And based upon that, you can anticipate if the next session is going to continue the order flow from previous session. I'm going to give you an example. And I'm 130% sure that some of you are going to be looking at this example and you're going to be thinking to yourself, wait a minute, that is my model. And I hope that some of you are going to feel that way, because once you start investigating this, you're going to be smiling. Enough of the rant, sorry. Trying to stay on topic as best as possible. What I want you to see is that the morning session expanded towards the downside, and we'll get to that in a bit. Morning session expands lower, and we see this huge repricing lower taking place. We see the AM low eventually form, but what do you notice about this AM low? Pay close attention right here. Do you see how the AM low formed right in advance of the weekly open? Guys, the weekly open is each week key level. When you see price stop right in advance of it throughout the particular session and the underlying order flow remains the same, that low, which forms right here, is an engineered sales liquidity pool. Think back to what I explained to you when it comes to continuations right here. You see how you can literally see what I've just outlined in the schematic within the chart. I hope that you're able to see that connection. If you don't yet, I highly suggest you to just go back into this video a few minutes. And when you go back a few minutes, I hope that you'll be able to see exactly what's going on right here. Because what the continuation model is based around is the fact that a session or time cycle, fractal, doesn't matter if we're applying this logic intraday or intra-week, or for example throughout the month, or throughout the quarter, or throughout the year, or throughout the decade, it's all the same. And that's what I'm explaining to you. This is how these markets work. This is how these big entities reprice the markets all the time. Everything is fractal. You will see this when you investigate this on your charts, which I know some of you are probably too lazy to do. And if that's the case, well, too bad for you. Like, honestly, I'm sharing this because I'm trying to make an impact on your lives. I know what this information has done for me and my family, and I hope that it will do the same for your family. You're in my prayers always. And I really hope that you investigate this. Because if you do investigate this, I promise that you will never, ever, ever again be looking at the markets from the same perspective. But what you need to realize is that when the first time cycle expands towards the downside, stops in advance of a higher time frame draw on liquidity, and we see the market retrace higher, that retracement higher has one function. And the function of that retracement is to engineer liquidity. It's to trap unknowing buyers into the marketplace. Where do they place their stop loss? They place their stop loss below this low right here. That's the sell side liquidity which we need. The market then will seek to open up higher throughout the next cycle and expand towards that engineered sell side. So when we pay attention to this chart delivery right here, what we would like to see is that the morning session expands towards the downside, stops in advance of the weekly open, and a retracement higher takes place. Notice that this very large CB gets created, and everyone's looking at the CB like, oh, the market should return back there for a continuation lower taking place. Nope. Why not? Because it's a breakaway gap. This gap is supposed to stay open if the afternoon session is going to draw towards that weekly open. When does the big distribution take place? Inside of this candle right here. Why is the distribution taking place inside of this candle? This candle is the 1 p.m. RE candle. For the afternoon session, the 1 p.m. RE candle is very important to monitor. It's the beginning of the second 90-minute cycle of the afternoon session as well, 1 p.m. What you can see is that this candle opens up, initially runs higher, trading above the midnight opening price, repricing into this all-in inefficiency on the left side of the curve, inversion of value gap. And we see the market then expand towards the downside, reaching the weekly open. Weekly open gets met, and the AM low, of course, gets taken out, previous session low. Rejection takes place, and the market reprices higher and consolidates to end the day. It's inside of this repricing lower that IPTA is completing its full job. It's completing the move of the session. What is the move of the session? The move of the session is from the midnight open to the weekly open. Those are the two reference points that IPTA is using to reprice within that particular price range. When we then pay attention to the 1 minute time frame, what I would like to see is that my trades are visible here. And I'm going to be walking you through exactly why I did what I did. Notice that the macro which we're going to be paying attention to is from 12:45 to 1:15 p.m. Why is in particular this macro so important to us? The answer to that question lies in what the launch cycle did. What I would like to see is that the launch cycle began at 11:30 a.m. and we saw the market open high. Notice that the market reprices higher and eventually forms this high right here. This is the low of that RECB, keep that in mind. We see the market reprice towards the downside and consolidation takes place. Market is going sideways. Why is it so important that we opened up and ran up higher to begin the launch cycle? The reason why this is so important is because this is manipulation taking place. Time distortion occurs throughout the launch cycle. Why? Because what IPTA is waiting for is it is waiting for that second 90-minute cycle to open up. What my eye is drawn towards then is something to occur after the open of that 90-minute cycle. And what it is something which is of great importance, which you're probably not paying as much attention to yet. But after this video, you are going to be paying attention to it. Either consciously or subconsciously. But you are going to be paying attention to what I'm about to share with you. 130% sure. There's no way that you're going to be looking at these trades and think to yourself, oh, you know what? It probably must not be as significant or whatsoever. Listen closely. I'm not even sure if I should share this publicly or if I get into any trouble, but I'll explain it. 12:45 to 1:15 p.m. is the macro which I have interest in. Why? Because I anticipated that 1 p.m. RE candle is likely going to distribute lower. We see the 1 p.m. open taking place and the market initially has this push higher and it has a sudden drop lower. What is this sudden drop inducing? It's inducing a lot of people to want to go short into the market. Where do they place their stop? They place their stop above these highs right here. This is the engineering of buy-side liquidity taking place. We see a push higher taking place. And do you see how quickly, with how much speed this takes place? At exactly 1:15 p.m., we see this high formation taking place. Do you see how long this wick is? This wick takes out buy-side liquidity resting above this high, and we'll get into that a bit. The moment that the 1:15 p.m. candle closes, I know that I can short the next candle. Why? Because this is a bearish rejection block being created. And when you know the PD array matrix and you know the whole sequence to it, you're able to recognize when the rejection block takes place. And once you see the formation of the rejection block, you can then anticipate that the remainder of the premium matrix is going to deliver. But that's a whole topic for another time. I'm not going to be diving into that today. But the moment that this candle closes, I'm shorting the next candle. And again, live execution from A to Z is literally visible on my YouTube channel, where you can see me go short on Nasdaq and draw this eye down here. And I've deliberately made it a bit smaller, and I kind of regret having used this symbol because I know even showing this symbol within this video and within that execution video could get me into some trouble. But I put a triangle on my screen when the market was up here, and I set eyes down here. The market reached that triangle at exactly the place and time where I put it. You tell me, if there was no algorithm in control of the derivative price, if everything was just buying and selling pressure, how would I be able to time exactly where my partial is likely going to take place? There's no other way to accept that it's simply rigged. And I know that might hurt some things. And I know that some of you might be watching this video and might be like having all these old beliefs that have been nurtured to you by the media, by school, you name it, by your parents, even by the people you're surrounded by. But all I ask you to think about is, how is it possible that I am able to draw lines and predict the future every single week? And it's not just me. There are thousands of people that have watched my content publicly for free here on my YouTube channel and have found major success with it. Think about that. Why? Because it's time and price, and it's the same framework every single week, where we pay attention to time through the perspective of time cycles and price through the perspective of market maker models. Once you become good at blending those two elements, man oh man, a whole new world opens up to you. Market expands towards the downside, and do you see how it rips through the imbalances which formed inside of this final push towards the upside? Those imbalances are not BCs to buy off. I know that many traders are looking at this and they see a BC, they see it form throughout the macro window, buy. No. Why not? Because the draw on liquidity is the weekly open and the AM low engineered in advanced fit. Original consolidation, buy side of the curve, sell side of the curve. When does the sell side of the curve take place? After 1 p.m. And we'll get to that 1:15 p.m. candle in a bit, don't worry. Market expands towards the downside, and notice how I'm utilizing the BCs which formed throughout this push higher as what? As premium raise to short of. See the market displays lower with this large down close candle. See the market trade below this low right here in particular. Small little inefficiency gets created. Retracement higher occurs. Eye of fat, institutional order flow, entry drill. And we see the market expand towards the downside beautifully. Reaches my triangle at exactly the right time. Partial. Why am I partialing there? Because ES and the Dow already reached the objective of the AM low. So that is an SMT being established. Market eventually reaches the weekly open, but notice that we see a rejection taking place of the weekly open, and the market reprices above the high, which set up the repricing into that weekly open. So that's to me the exit. From there on, the buy program takes place, and I know that many traders took this buy as well, but I'm not going to touch on why this is a buy as well. But what I would like to see is that there are counters opportunities. Because if you pay attention to the buy right here, which is taking place, pay attention to the time. What's the time? 1:45 to 2:15 p.m. Must be random, right? Man, oh man, oh man. Once you start seeing this, you're going to be smiling. You're going to, like, honestly, the most fun part of my journey was, of course, making a shit ton of money. That was phenomenal, right? Being able to provide for the people that I care about deeply and being able to live the life that I always dreamt of. But the most enjoyable moment that I wish I could go back in time and relive it, is once I saw it. Is once I experienced what it was like to see this. That initial light bulb moment. Because when that light bulb moment took place, it was just connect. Because all the dots begin getting to get connected. And you have all these different puzzle pieces now. You have all these different puzzle pieces that you're being introduced to by watching these lectures. Where I'm sharing all of this knowledge for free on YouTube. Yes? But where the beauty takes place is once you start to see how each one of those puzzle pieces is connected. And I'm not trying to make this easy. I'm not trying to make it like anyone can just figure out what the sequence is that I'm explaining to you. And the reason why is because this information is not meant for everyone. It's as simple as that. You need to be putting in the work. You need to be going out there and investigating these charts. You need to have these late nights where it's like, guys, I'm recording this at 3 a.m. in the middle of the night. That's why my voice may sound a bit different as well. And that's might be why I'm sounding tired. But guys, this is what it's like. You need to have those late nights. You need to have those late nights where you're studying the charts. You need to be able to just say to yourself, okay, you know what? Right now, for the upcoming few months of my life, I'm going to dedicate and give it my all. And only if you do that, you have the ability to say at the end of the road whether or not this is something for you. Until you dedicate that much time and effort into these charts, you have absolutely no right of saying, oh, I can't do it, or it isn't for me, or whatsoever. You see these people, they try to learn how to trade, they go out there for a month, and then they give up. Well, let me tell you something. If you're still watching this video after all of the ranting which I've done and where I completely went off topic, you have what it takes. Why? Because you have the patience which is required. But you also have the desire to learn and to investigate. And it's exactly in that desire that you're trying to figure all of these little puzzle pieces out and trying to connect them and blend them and see how all these markets are being driven by high frequency trading algorithms all the time, because that's what's going on. HFT algorithms, you can research everything you want, and it's not a commonly discussed topic. And the reason why it's not a commonly discussed topic is because there's a disgusting amount of money which is being made out of it every single day. But when it comes to being able to go out here and find these setups again and again and again, you must be able to recognize that it's a repeatable process. In front of you, you have a shorting opportunity where I took the south of the curve right here. But do you see that south of the curve turned into a buy program afterwards during the next macro? I know that many traders took this buy. Why? Because it was a beautiful buy. Does that mean I should have taken it? Does that mean I should have also rode the market up higher? You could argue yes. You could say, you know what? You should have done this. You should have done that. But let me tell you something. I'm not trading for you. I'm not trading to basically go out here on social media and say, look, this is all I'm doing every single time and blah, blah, blah. This is how good I am. No, I'm trading for myself. And because I'm trading for myself, I'm being content with enough. The biggest pitfall that I've made personally, and I know that many of you have also made, is trying to do too much. Where you've made a handsome profit for the day or for the session, but you know, I'm not satisfied with this. Let's just try and take one more trade, just one more opportunity whatsoever. But it's exactly that right there that you need to stop. Learn to be content with enough. And thank God I realized that, and I realized that I'm not living to trade. I don't get any dopamine from the charts. I'm not out here for fun. I'm out here because it's pure business. That's the only thing which I'm considering when I'm looking at the charts. Some of you are coming to the charts not in a way of, oh, I need to make money necessarily. No, you're coming to the charts because you're trying to get a sense of dopamine. You're trying to get a sense of fulfillment from the charts. Why? Because your personal life is messed up. You might be unhappy with your family situation. You might be in a toxic relationship. You might be working a job you don't want to live. And these charts become a way of trying to escape. If that is the case and you recognize and you feel in your heart that what I just outlined is the truth, you don't have any work on the charts to do right now. And the reason why, and don't get me wrong, I'm not saying that you shouldn't investigate. You should definitely investigate, dedicate everything into this, because this is the most beautiful job, if you want to call it a job, in the world. It's the most beautiful business out there. But if you feel that what I just shared resonates with you, and you feel like, hey, what I just outlined is like hitting a snare, so to say, and you're like, damn, you just described why I'm going into the charts, look at your life. Look at how you need to improve. Look at what areas of your life you can have control over. And then simply do one thing. Begin improving every single day. One day at a time. Try to define, okay, these are the elements of my life that I know I need to improve upon to feel better. Because until your head is clear, you will never be able to perform to the best of your extent. The moment that you get a clear mind and you're able to see very clearly of, okay, this is what I'm out here to do. I'm trying to get this amount of points. I'm trying to get this amount of dollars from the markets today. Once you're able to define what that number is for you and you get it, you're done. Why? Because you're not out here trying to feel good. You're out here because this is your business. This is what you're doing all the time. Nothing else matters until you reach that threshold. And once you reach the threshold, be content with that and go and do something fun. The charts are not meant to be fun. Don't get me wrong. I absolutely love looking at these charts. Like, I could be speaking about all of this delivery which is in front of you for hours in a row, but I promise I won't do that because I know that I would probably bore a lot out of you. The one more thing which I would like to share with you. You see how the market expands higher right here throughout that 1:45 to 2:15 p.m. macro. Do you see what the market reprices into? It reprices into that rejection block. And do you see how it rejected? What if I told you that this rejection block provided another shorting opportunity throughout the macro afterwards? Yep. Man, oh man, oh man. Buying and sell pressure, right? Oh yeah, I'm having fun creating this reaction. I really enjoy it. And I mean, this is the type of joy I can't get from a presentation style because I've structured it so like, okay, this is what I'm going to discuss. This is it and nothing else. But when I do it this raw, the only thing that matters is simply, okay, what am I out here to share? And what is it that I'm looking to discuss? Yes. And it allows me to also freestyle a bit. And that's why you notice that I'm not getting like, you know, boring. I'm enjoying this. And I really hope that you're able to look at this lecture and the enthusiasm in me that you realize, wait a minute, this guy is actually so freaking passionate about it. And the reason why I'm so passionate about it, because I know it works. And I see it working every single freaking day. Man, oh man. But back to that 1:15 p.m. candle, because I promised I would teach you why that candle was important. In front of you, you can see the Nasdaq and the Dow. And I said I would teach you something when it comes to knowing that the high of a cycle is in. I said at the beginning of the rant I just went on. Yes? I know that probably 80% of the viewers have clicked off. And that's a fact. I can see the stats all the time and it's always making me laugh. Imagine if you can't listen, like watch a video for 30 minutes or something, or what, I have no clue how long this video is going to be, but imagine if you can't have the patience to watch a video for 30 minutes and then expect that you'll be able to trade the market successfully. Insane, right? Hey, that's the mindset nowadays where it's all just quick dopamine hits. People want it now. People want like the shortcut. They want, tell me 1, 2, 3 how to get into a buy and whatever. And that's why all of these trading indicators and all of these like signal groups are so like popular nowadays, because people want the easy way. But let me tell you something. The easy way never freaking works. And you either take my word for that or you find out the hard way. Your call, right? But when it comes to knowing that a cycle high is in, so that the high of the current 90-minute cycle is in, or we can remove 90 minutes. Let's take it a step broader. For every cycle is SMT. Because what does SMT stand for? Smart Money Time. What you can see is that the Nasdaq created a higher high right here, whilst the Dow Jones created a lower high. So this is signaling to me that manipulation is taking place and it's going to come to an end now, and that smart money is going to reprice towards the downside soon. Pay attention to it. Investigate it. Where is this occurring above the midnight opening price? When do we want to short, or where do we want to short? Above the midnight opening price. Above any open. Take it one step further. So are you beginning to see how everything is fractal and how it's all occurring inside of each other? Whether it's the midnight open or the cycle open or 10-minute cycle open, and yeah. You're beginning to connect the dots. I promise I won't bore you too much. Let's move on to the example of the reversal. Honestly, and this to me, I'm really enjoying this. And please let me know in the comments if you like it as well, when I take you literally into the charts and share the full top process with you, where I'm simply just sharing with you, pay attention to XYZ. Because I promise, if you start investigating these elements which I've discussed so far during this video, you're going to be coming back to this video maybe in a few months from now, maybe in a year from now, maybe in a few years from now, and you're going to be thinking back to, damn, that this one video really like shed some light on certain things which you might have already known from a topical perspective, that you know, okay, this is important, etc. But you didn't know yet how to put it in the right order. Where you must realize that the way I've trained my brain to think in terms of top processes is in a very objective manner. If this, then that. And the reason why that is important is because that's exactly how IPTA is coded. If this, then that, during the right time. That right there is the sequence. And once you recognize the sequence, and you recognize the sequence in both time and price, because there are sequences in both, once you recognize what those sequences are, and you're able to define very clearly, hey, now the time and the y-axis, the price axis, are telling you exactly the same story, that's when you know you have a high probability trade setup. Until that is the case, you don't have any high probability trade setup. So do you see how trading purely based upon price patterns is gambling, and why the majority of people that try to do so all fail? I just gave you the answer. It's time. So let's pay attention to an example of a reversal then. Don't want to make this video too long, because I know some of you are probably like, okay, get on with it. Trust me, guys, I have so much that I'm sharing already, with which I plan on sharing as well over the course of the upcoming period, because I feel all the lectures which I produce now as my duty to humanity, where I'm trying to make as much impact as possible on your life and the lives of your loved ones. Because pulling down the amounts of money that I'm pulling down every single month, it doesn't mean anything. It literally doesn't mean anything. Why? Because I've already changed my lifestyle to a point where I can't really improve upon the current lifestyle which I have. I can't really go out there and improve like a crazy sum. The most amount of lifestyle change which you're going to notice is once you start going from barely any making money to being able to afford your bills, to being able to travel, to being able to take care of your loved ones, to being able to spend money without looking at the price tag, etc. But once you get beyond that stage and that becomes your new reality, you start looking for different ways of fulfillment. And one of those avenues through which you can find fulfillment, and the way I'm finding fulfillment, is by making impact. And when I read those messages of people just saying simple thank you, and I wish more of you would say it, like I love it when I read those emails, or when I get those Telegram messages or whatever, right? Or even read through the comments on YouTube, which are turned off for a reason, by the way, because I don't want the comments to distract me in any shape or form when it comes to, oh, you shouldn't rent this much or whatever. If you don't like my content, you don't like my content. If you don't like the way I articulate, or if you don't like the way I speak, because that's like, some people think, oh, you should take English lessons or whatever. Screw that, right? But it really is just so fulfilling to know that I just played a small part in your success. And if that success is making a few grand a month and being able to replace your current income, or making tens of thousands of dollars a month, or even hundreds of thousands of dollars a month, or even millions of dollars a month, Like, I know there are some. I'm not even going to say it. Sorry. Anyhow, back to the example of the reversal. What I would like, but just to know that I've made an impact on your life in that way, that whatever I'm sharing with you now here on my public YouTube channel has made a positive impact on you, that you've learned something, that you found a way of looking at the marks from a completely different perspective than what's normal. Ask yourself, why is defined normal what is normal? It's because they want you to believe certain things about the markets, etc. And they want you to believe that it's all a free market and whatever, right? But to just know that there has been some value which you gain from my lectures, it's so fulfilling. And I'm not going to get into a whole like spiritual conversation because that's not the topic of discussion. But I do believe that this life is temporary, which everyone knows. We're all going to die one day. But I do believe in the hereafter. And I know that how I behave in this life is going to be reflected upon on Judgment Day. And that's all I say about that. And what you can tell, and it's crazy that I'm even speaking about all of this stuff during a video on timing expansions, because to be fair, it's not even crazy. And the reason why it's not crazy is because it's all connected. There are phases to everything. And once you start looking at these markets from a phase perspective and you begin to recognize that every single expansion retracement is going to get followed by a new expansion, and you pay attention to your personal life, you will see that there are phases in your life as well, in your journey, where certain phases, it feels like you're skyrocketing, where it feels like everything is going just boom, up, right? Where you feel like, yes, you got that momentum. Then a slowdown takes place. And when that slowdown takes place, that's where the majority of people quit. Why? Because they can't handle the fact that, hey, things are slowing down. I'm feeling less motivated. I'm feeling less motivated to show up to the chart every single day, to stay up late and investigate, etc. But if you have the courage and the patience, yes, to simply sit through that, knowing that a new expansion higher is going to take place, where that next sense of energy is going to come, you're destined for greatness. That's something which is so important to keep in mind. But when it comes to an example of a reversal, in front of you can now see the same chart, our chart which we started this lecture with, the chart example. We're going to be looking at the short which took place up here. What I would like to see is that the market consolidated right here. We saw the market run up higher throughout the beginning of the New York morning session, and we saw the market take out the previous day high, the Wednesday high. What the SMT detector is signaling right here is daily SMT with ES, with the S&P. Do you see how this candle opened up, ran up higher, had this huge wick, and we then saw this large rejection take place? When you see that rejection occurring from the previous day high and where you're not using it as support and price, what's the next macro from 9:45 to 10:15 like going to do, because this is the 9 AM candle? It's like going to distribute towards the downside. What does 10 o'clock do? 10 o'clock opens high, slams lower, taking out these relative weak lows. Do you see this? It's time, then price. When we then pay attention to a 1 minute time frame, and as you can see, I didn't trade this run lower, but I have plenty of students who did, as you can see right here. And the reason why I'm showing this to you is because I don't want you to think, oh, this guy, his concepts don't work or whatsoever, because they do work. There's nothing as precise as this. There literally isn't. But the reason why I didn't trade this is because during the London session, I took a phenomenal trade where I shorted the high of the London session, which I posted on my Twitter, on my Telegram channel, etc. So I already had a very good day and actually was already planning on calling in the weekend. But when I saw my Thunder model presenting itself hanging in the afternoon session, for me, it was like, yeah, screw it. Why not? And then I took the short and it again panned out to the tick. So beautiful. But looking back at this delivery, I must say, I don't feel any regret for not trading this. And the reason why is because I know it's going to repeat. I know the same algorithmic signatures are going to be there next week and the week after and the week after that. Why? Because this is how these markets move. And because I understand that, I'm able to deal with the fear of missing out as well, where I'm able to say, you know what? That move that I just didn't trade or missed out on soever, yes, doesn't matter. Why? Because there are going to be hundreds, if not thousands of moves, which I'm going to be able to trade during my career, or doing, of course. And therefore, understand that because these algorithmic signatures repeat themselves, like, you don't have my permission to ever feel like you missed out on a crazy move and now you're a bad trader. Never ever speak down to yourself. Why? Because you need to realize that the fact that you're able to understand why the market moved the way it did is already a win, no matter what. Why? Because if you're able to understand it and you're able to recognize it in the future, what will then occur is that you'll be able to say, you know what? Hey, I see the same algorithmic signatures as the previous time, and therefore I can anticipate what's likely going to happen next. And once you get to that level, man, oh man, oh man, it's a beautiful feeling. But go to walk through this delivery. 9:30 opens up. 9:30 initially runs higher, and we see the market take out the buy side liquidity resting above the previous 30-minute cycle high. Keep in mind, previous day high has been taken out, and we have daily SMT there. See the market run up higher, and we see this imbalance form. This imbalance gets displaced through, and a retracement higher occurs. Market rejects this wick right here, and pay attention to what's happening here. At exactly 9:45, which is the beginning of the macro, and do you now begin to see what I'm saying to you? Please begin your macros as ICT taught them 5 minutes earlier and end them 5 minutes later. Do you see the importance of that? When you see exactly at 9:45, this displacement leg lower, true previous 30-minute cycle high, true previous day high, which should have functioned as support and price if the market was in fact going to continue bullish. Do you see that that's IBDA tipping its hand to you? This is the real change in the state of delivery. And once you recognize this, and you recognize a buy to sell program, and you know the bigger picture, imagine shorting it up here, placing a stop loss above the 9:45 high and holding it all the way towards those lows from the RE chart. 1 to 3, what do you mean? You do the math on that. We're speaking about a risk to reward that you cannot even phantom right now in your head. But once you begin to see what's possible utilizing these concepts, and I'm not saying that you're going to become profitable, I'm not guaranteeing that you're going to become profitable, I'm not a financial advisor. Just hypothetically imagine if you would go short on Nasdaq up here, stop loss above the 9:45 high, and run it all the way down towards those lows. Do that once a month and you're set for life. And all that it takes is recognizing on the RE chart what the delivery profile is. Accumulation, manipulation, distribution. And yet you still have these guys saying, time cycles don't exist. It's all just price and this and that. You see these boxes that the time cycles indicator which I use plots. They all have a specific function. And their standard function is that 7 to 8:30 accumulates, 8:30 to 10 manipulates, so that 10 to 11:30 can distribute. Do you see how the high of the morning session formed exactly between 8:30 to 10? That right there is manipulation which occurred. Based on that, you can already anticipate that 10 should distribute because we're in the market makes a sell model. Market expands towards the downside, and do you see how it's using the previous day high as resistance on price right here? And do you see how the market never retraced into this gap? The reason why is because it's again a breakaway gap. Once you start to see these breakaway gaps, it's all has to do with bounce price ranges. But that requires a whole different lecture, and I'll be sure to touch base on it in the future. But what you see is that the market expands towards the downside, and we see the CB getting created. See the market retrace into that CB, and we then see the market slam through the low, which formed exactly at 9:30. 10 o'clock comes along, time distortion occurs, sideways delivery, and the market expands lower once again. Do you see how this CB gets created? The market taps into that CB multiple times. It's being held inside of a range. whereas is securing at 22,000, which is a very important price level. This is time distortion taking place. And what's happening inside of this time distortion is that high frequency trading algorithms are firing in their short positions. Price is being held inside of a very narrow range so that they're able to get a very precise short price on their short positions. The market eventually expands towards the downside, and you see how quickly this occurs. We see the market retrace into the highest CB, which formed right here, the moment that we displaced through this low, the low of the time distortion. And we see market eventually have another push lower. Market expands lower, CB displays through this low, which is previous 30-minute cycle low. So for continuation model, that previous 30-minute cycle low has to function as resistance on price in order for the underlying order flow to remain bearish. See the market retrace into that CB, boom, slam lower, deliver the objectives. There's so much that I didn't touch on within this breakdown, like of this delivery in front of you, that I could touch on, but that would make this video only longer than it did. And I already like ranted way too long, and I truly apologize because I know some of you like, you just want me to be straight to the point. However, there will be videos in the future where I speak about these things, where I'm opening up more to you, where I'm using my emotion to make sure that that change takes place within your trading journey. Because the thing is, if I would just stay objective all the time and would just share with you, okay, this is macro, etc., or whatever, right? What's the value in that? Surely you might learn a thing or two about the technicals whatsoever, but you wouldn't be able to appreciate it as much as you should, because you wouldn't be able to see the magnificence behind all of these things, right? You'll probably see SMT and be like, oh, it's a pattern SMT. Or, oh, you see that gap form, oh, it's a CB2 short of, or whatsoever. No, there's an order. There is structure in the chaos. There's order in the chaos. And once you're able to see that again and again and again, I promise you'll be looking at these marks and you'll be thinking to yourself, like, it's a feeling words can't describe. And some of you are probably experiencing it by watching this video. And some of you are going to experiencing it in the future when you dive deep into the chart yourself. But you're going to be looking at price delivery and price action from the perspective of, what is this really going on? And you're going to be looking around the room and you're going to be thinking to yourself, should I know this? Going to be worried, going to be afraid that the FBI is going to kick your door open or whatsoever, right? For some reason, my camera stopped recording the moment I said that. Must be random, right? But when you feel that way, understand, yes, that that's completely normal, yes, and all you can do is just smile and understand it's part of the journey, and understand that what you're beginning to see within the markets is actually taking place every single day, every single week. And once you start to see that, you're going to see countless opportunities. And because that you are going to feel a sense of relief that words can't describe. But when we scroll down, what I would like to see is that there are students of my time and price mentorship who took this short beautifully. For example, this student took it exactly at 9:45 a.m. Random timing, right? This student took it at exactly 9:45 a.m. with one fill. He took a fill even prior to that, anticipating that the market would expand. And it's just beautiful to see this, guys. Like, to me, it's such a phenomenal feeling when I see students of mine, whether they are private students of mine or whether they are public students of mine, doesn't make a difference as long as someone has studied one piece of my content and they found value in that. And I see that they're looking at the market through the perspective which I outlined to them. Man, it's just a fulfilling feeling. It's just awesome, honestly. Words can't describe it. And I'm going to end this video by playing a recording of this student who recorded his full trade execution, where he literally shorted the high of the day on the Nasdaq, and he wrote it down beautifully. And he wrote down, "Thank you, Zeussy, that's enough for me." And the reason why I want to share this with you is because I hope this is going to inspire you to dive deeper into that, what I outlined during this video. I know I mumbled a lot. I know I ranted a lot. I know that some of you are probably thinking to yourself, like, that was a long one. It was indeed. I have no clue how long this video is. I know it's way too long probably for the topic of discussion. But I do hope that by watching this video, you have gotten a good insight on knowing when a macro is likely going to expand, when you can consider looking at it, focus on recognizing continuations or reversals. Because once you're able to recognize that, man, you're going to filter out so many bad trades, and you're going to be able to focus purely on the highest probability trade setups. And that's where your focus should be. Your focus shouldn't be doing more. Your focus should be on doing less. And I've literally just outlined to you how to do less. But when you do something, you do it right. And that's my perspective. And before I go on a whole new rant, I want to end this video. It's already nearly 4 a.m. at the time of recording this. I apologize if I look tired as well. But I've tried my best to create this video as energetic as possible, to hopefully have made an impact on your understanding, that you're able to see these things. I hope that this video has given you some light bulb moments as well. And just let me know in the comments if you enjoyed this video, please. I really would appreciate your feedback. And all I can say is, honestly, good luck with your studies. And I'm rooting for you. And understand that it's going to take time. More time than you probably think at first. You probably think that you're going to be a multimillionaire next month or even next year. Doesn't work that way. Set a timeline for yourself. Create a sense of urgency. And then work towards accomplishing your goals within that timeline. Yes, but understand that you must submit to time. Go at your own pace. You should be finding the balance between not slacking and not doing anything, but also not trying to push it too hard. Because there are like bad things about both sides, right? Try and find the middle ground for you. And once you find that middle ground, just ride it. And just slowly keep on stacking the daily wins. Because they compound. Thank you for watching this video all the way to the end. I hope that you really enjoyed it. Let me know in the comments if you did. And I want to wish you good luck in your studies. Be safe.